Hey, welcome everybody. This is the day trading strategy session. I'll just give it a few minutes here for everybody to join. Just remind everybody that we're just on GoToWebinar right now. I was having a little bit of issues on the simulcast today for Discord as well. So I appreciate your guys' patience. Looks like we got about 26 people. We're expecting a little bit more than that. So let's just be a little patient here. Just let me get started here in 2 minutes. Thanks. Let me just double check, make sure everybody can hear me here. Yeah, good afternoon. Yeah, and this strategy or the session is recorded. Yeah, so no worries if you guys can be here real time, and if you are real time, just so you know, the session is recorded as well, so you can go ahead and review it. What we'll do is we'll go ahead and get started. So I know this has been heavily anticipated over the past maybe 1 to 2 weeks or so. I appreciate your guys' patience for me to start it. But what we're going to be doing today is going through my day trading strategy. So I know a lot of you guys will join, the Eagle day trading live stream. We'll make some profits. Sometimes we'll make some losses as well. But what we do is we use this day trading strategy. And I know we use it real time, right? And I'm usually kind of it's high pace. We're making a lot of trades, and we don't really get a chance to kind of sit down and discuss exactly what I'm doing. So today, what we're going to do is we're going to do exactly that. And I'm going to kind of walk you through all different parts of the day trading strategy. Number one, starting with the setup of, the charting setup. Number two, we're going to talk about entry. Number three, we're going to talk about management. And number four, we're going to talk about exit. So those are going to be all four of the sections that we're going to break up the webinar into. And we'll go ahead and start here with the setup. So right now, what you can see on my screen is exactly what I look at when I am day trading. It differs from time to time, but number one, the platform that I use is TradingView. Number two, not the light theme, I'm using the dark theme. So how do you do that? You just right click here and you can go to color theme and you can click between light, and you can also click between dark as well. So I'm always on the dark theme here. I have a few different indicators which I'm using. Number one, we're using the stochastics indicator. So if you go ahead and click indicator here, you can just type in STOCH. And it's stochastic right here. It's just a simple one. And that's the indicator you see down here below. For day trading as well, I always use the VWAP indicator. And what VWAP is you just go here, you type in VWAP. And what that is it's this green and blue indicator you kind of see overlaying the price here on the chart. Usually on other platforms, VWAP will just usually show up as the blue line. However, on TradingView, when you use the simple VWAP, you also get something called the VWAP range, which is kind of this green area here, which is the equidistant area from the VWAP. So there's the VWAP range and the VWAP in TradingView. The last big thing I have on here is Heikin-Ashi candles. And you can do that by clicking right here and just clicking Heikin-Ashi. This is very similar to the swing setup. The biggest difference here is we have VWAP installed, and VWAP gives us a lot of information about kind of what the price is doing intraday. One thing that I want to put on everybody's radar is that I do have one of the paid plans here on TradingView, the one that does allow me to view seconds. And I never really use the 1 second or the 5 second, but I do end up using the 15 second, and I also do really end up using the 30-second chart. So Why that's important is because I know, it's not available through just the base version, but I do see a lot of benefit in the 30-second and 15-second charts. And that's just because I'm able to kind of, map out some levels that I cannot see when I'm looking at the 1 minute and the 3 minute, because, these shorter time frames give us an extra candle or two per minute. So those are just the main basics here, guys, on the setup of the chart. If I'm missing anything, just let me know. But I just review quickly: Heikin-Ashi candles, dark themes, stochastics, VWAP, and I think that is about it in the 30-second charts. Something else I also like to do is if you do have a paid version of TradingView, you can select layout. And usually when I'm on kind of a bigger screen, or I have multiple screens in front of me, I can use this 4-chart setup. This 4-chart setup can just kind of help me look at multiple correlations at one time. And that's always important, is because a lot of what we do in day trading is comparing and contrasting price action between two different assets, the market and a different stock, to understand things like relative strength, relative weakness, and making inferences about a certain stock's price action, kind of based on those comparisons. So before I get kind of too much into that, that's the conclusion there of the setup of what I'm usually looking at. No, I'm not using Thinkorswim for the charting setup, although when I do execute my orders, I always use Thinkorswim. And the reason I use Thinkorswim is just because I can see the option chain, and I just have experience on that. You can pretty much day trade with any broker. The big thing is when you're choosing a broker for day trading is just being really familiar with it, because what you're going to want to do is be able to execute orders very efficiently, quickly, in and out. And that's, with day trading, a lot of the trades that we're in, last, a minute, 3 minutes, 5 minutes. And during those times, timing does matter. So, if you're trying to explore and try to figure out the platform when you're trying to day trade, that can really be a problem. So just make sure whatever broker you decide to use in conjunction with TradingView, is that you're able to execute orders very quickly. The one that I use personally is Thinkorswim. Now what I'd like to do is go towards the second part of the seminar here, where we talk about entry. And so entry, there's a lot of stuff that goes into entry, and I'm going to try to simplify it for you guys. One thing that I was kind of, saying out to all the clients is that the strategy is very simple. And it might be, you might think it's almost a little too simple starting off, and you'll question, does this really work, or does it not really work? And what I would say is, it's simple, and simple is good, and simple has worked well for me. And the more simple we keep it, the better. There's no need to complicate your trading. So, the biggest thing when I start and talk about entry is that, you sit here and you say, okay, there's so many stocks in the market, right? Which one do I choose to day trade? Is it the same stock every day? Am I looking at different stocks? What triggers me to get into a certain stock, or which stock should I be watching? And frankly, what I want to do is tell you, it needs to be it's one of two things. And the first one is HOD, and the second one is LOD. And I'll go ahead and just put this up here for you guys. But these are the two almost most important things that you need to be concerned of when you're looking for a stock to potentially day trade according to the strategy. So the first one is HOD, and the second one is LOD. Some of you may know that HOD means high of day, and LOD means low of day. But these are very, very important, because we never take a day trade based on the strategy unless a stock is near HOD or near LOD. And the simple nature of the strategy is that when we see a stock near HOD, this is when, we're potentially looking to take it long. So for example, right now, I'll go ahead and delete this. We're looking at Amazon right now. The chart is here, Amazon intraday, the 30-second chart. And Amazon is, approaching actually, and has continued to make HOD, or high of day after high of day, pretty much all day. And that's important for us to look at, because when we see a stock going for HOD, continually HOD, or high a day, is that we're looking for a potential long setup. And one thing to note with the strategy is when a stock is at HOD, we're never looking to short it, right? And vice versa, when a stock is at LOD, we're never looking to long it. So for example, when a stock here is at HOD, we're looking at a potential long. Maybe I can go and find a stock here off the top of my head that might be similar or closer to LOD. So let's look at Goldman Sachs here, which is which is closer to LOD. So I can even kind of put these up next to each other so you guys can see the difference. But here's GS showing us LOD, and here is Amazon showing us HOD. So obviously you can see that there's two, stark differences between the chart. One is going to be, red, or one's going to be green. But it's very clear here that GS, or Goldman Sachs, is at LOD, or low of day, and Amazon here is at HOD, or high of day. Another thing that you'll see me say a lot is NHOD. So there's NHOD and HOD, then there's NLOD and LOD. So these are some of the most important, terminology here that you need to know, especially when you use this day trading strategy. NHOD is new high of day, HOD is high of day, NLOD is new low of day, and LOD is low of day. So pretty much what we're doing here is that we're always looking for stocks which are at HOD, and we're always looking for stocks at LOD. And just quickly, why we're not looking for a stock that's not at HOD or LOD is because if it's not, it's likely pretty choppy. And what we're doing is this strategy looks to take a stock that's going to move, right? There's many different ways to day trade, especially with options, right? You can use things like credit strategies, where maybe the stock is flat or something like that, right? And you're looking to maybe milk premium off the market. This is not that type of strategy. This strategy is looking for a move in the stock price, right? For the stock to actually move one direction or another direction. And if the stock is not near an LOD or HOD, it's unlikely that it's really, in some kind of trend, right? And we're looking for some kind of trend. And likely when a stock is not near HOD or it's not near LOD at the same time, it's likely kind of in between a choppy range, and maybe hasn't broken out, with the range or made a crazy move, during the day. So that's something that you can keep in mind. You can kind of look at every single stock intraday chart, moving forward, and see, what is at HOD, what is at LOD, and what might be not at them. And when it's not at either level, you should completely stay out and completely ignore the stock. Okay, so we went over the HOD and LOD for entry, right? And what we have on the screen right now is two decent setups, right? We have GS here at LOD, and we have Amazon here at HOD. And so what we want to do is when we see, LOD, we're looking at short. When we see HOD, we're looking at long, right? Because kind of something that goes along with the strategy is, the trend is our friend. Trend is our friend. And that is, corresponds with HOD taking it long, right? Because it's likely making new highs of day and going up. And Goldman Sachs here is likely going down, or LOD. So let's go ahead and talk about, brief on entry, right? And let me tell you kind of conceptually, what it entails. So let's go ahead and pull up Amazon here. We have Amazon pulled up right here, and what we can see is that Amazon is, consistently made highs a day, new highs a day, and new low a day, new high a day, kind of all day. So, we zoom up here and kind of see. I know we were all watching it this morning, right? Because we have the Platinum Eagle Fund trade on Amazon, but we went up, and we made new high a day, right? We saw a new high of day right there. Then we saw a pullback, right? And then we move up the indicator here to the new high day, right? And then we saw, boom, a new high day, another high day, right? So those are, we saw NHOD and we saw HOD. I'm just kind of trying to backtrack through history, essentially what we're seeing. But the basics of the strategy, right? Usually it's easier to teach things when we talk about buying it, right, or going long. So what we'll talk about is just HOD and maybe, longing Amazon here for the day trade. Essentially what the strategy entails is that when you see new high of day, the next pullback that you see after new high a day is an opportunity to get in for the new high a day. So that might not make too much sense right now, but what I'll do is I'll repeat it because it's very, very important, is that when you see a break of HOD or you see NHOD, right? the next pullback after that break is an opportunity, right? So let's talk about on the downside, right? Let's talk about GS here, just so you guys can get an understanding here, is that when you get the NLOD, right, or the new low of day, the next kind of jump, after that, or the next, I'll say the next jump essentially after the new low a day is an opportunity to get in to get into for it to go short, right? So essentially, I can use something called, just invert the chart, right? And Goldman Sachs, now looks like kind of a little bit like Amazon, right? Kind of going towards HOD, right? Obviously, we inverted the chart. But essentially, just like, when we go long, where, we get the break of the HOD, right, and then we get a pullback, right, that pullback is that opportunity to get in for the new HOD, right? And in this case, Goldman Sachs, is on the downside here. So this is LOD, right? And we go on Amazon here. We see it for HOD. So I know that can be a little confusing, but the biggest thing is understanding where the opportunity is, right? And the opportunity lies when you see the breakout of the high day, right? Because that shows, there's momentum some way, right? HOD means there's momentum on the upside. LOD means maybe there's some momentum on the downside. And then what that means is that when we get kind of that opportunity, which is that pullback, right? So we saw the breakout of the high day, right? And then we got the pullback here, because what we want to do is we don't want to chase, right? That's a big thing. I know a lot of people struggle with that with day trading, is like, how do I avoid chasing, right? And how you avoid chasing essentially with this strategy is that you are waiting for the opportunity. So essentially, we're looking to long, right? We're looking to potentially long Amazon, right? So, but we don't want to long it on green candles, right? We want to, try to time it a little bit better and potentially maybe buy the dip, right? So when we break out of this high of day, right? So, let's just kind of backtrack a little bit. I'll try to make it a little bit. Yeah. So we see Amazon here, we had the morning, right? We see the pullback here, right? And then we see the stock melt higher and test and retest and break the high of day, right? So when the stock does this, right, what you see on my screen right now, you'll likely see me when we day trade the strategy on the stream say that, okay, guys, we got the new HOD, right? We got the new high of day. The next pullback we see is going to be our entry opportunity, right? So, we wait and we wait for red candles. Frankly, is that we want to see red candles. You guys probably know is that we're almost cheering on, Amazon here to get red candles so that we can actually capitalize on the opportunity, right? So we're waiting, and boom, now we start to get some red candles here. Okay, get some red candles. Awesome. There's the red candles that we're seeing. And that is going to be our opportunity right there to get in for the next high a day. And obviously, things can, there's a lot of levels in there. We'll talk about the management and the exit and stuff like that as to how when exactly to get in. But the basics behind the concept is that the next pullback after HOD is the opportunity. And the next jump up after the NLOD or the LOD is going to be the opportunity to get in for it to go short. Obviously, the strategy is not going to work 100% of the time. Likely, no trading strategy will work 100% of the time. But what I have learned is that using the strategy has won. I win 80% plus. So, it really depends. The big thing now is that you got to time it, right? Is that okay? So, you're waiting for the next red candles, right, on the pullback, and we saw these red candles, right? You see some red candles right now, but they're are they, when do we think, it's going to stop pulling back, right? Because essentially, if we're getting in an option contract or, we're trying to get in the day trade, is that we're trying to, buy the dip as low as possible, right? And finesse the premium the best as possible and sell, the highest possible, right? So how do we know that the stock is not going to dip further, right? There's going to be some important levels which we want to watch in order for us to understand that the opportunity is still valid. So essentially in this setup right here, and I hope this is all making sense to you guys. We can always talk about it a little bit later as well. But there's a few different things that I want to put on your radar to understand kind of when you understand when to buy the dip and when to stay away from the opportunity. So number one is, there's a big important concept within the strategy, I'll go ahead and do it, is higher highs and higher lows. So I'm sure you guys have heard this before. Higher highs and higher lows, and maybe on the flip side, lower highs and lower lows, right? And something that occurs, in the markets is that when something is likely kind of, seeing some bullish price action, right? We're seeing higher highs and higher lows, right? And on the flip side, when we're seeing something maybe bearish, is going to be lower highs and lower lows, right? So essentially, this is a kind of a mantra here, which we're going to say here, higher highs and higher lows. And that's what we're going to be looking for when we're waiting for the opportunity, right? So essentially on the stock here is that, so Amazon made the high a day right here, and we actually just made a new high day, right? We also had a low right here, right? And I'll go ahead and turn this low orange, right? Kind of like support, and red will be the color of kind of resistance. Let me just turn that orange. Yeah, there you go. So again, guys, orange is going to be kind of support or low, and red will be resistance, kind of like high, right? So what we saw is, let's go here for open, is Amazon, came out of the gate, higher highs and higher lows. Then we got this pullback here, right? Got the pullback, and then we decided to bounce, right? We bounced, and so what happens is that right here, for some reason, the market didn't, or the buyers in the market didn't want to take it lower for some reason, right? I'm not sure what the reason is. It could be any reason, but it's important we note that is that for some reason, Amazon was going up, right? And number one is that the sellers came in here, and the buyers couldn't take it any higher, and it decided to fall down, right? The stock fell down. And then the sellers were exhausted, right, and the buyers stepped in right here, right? So these are important because we understand that these, for some reason, these levels here, the buyers were exhausted for some reason at the red level, and the sellers were exhausted for some reason at the orange level, right? So what I like to say there is that this is support, and then this is going to be resistance, right? And essentially, as the stock bounced, right, we saw that it tested the resistance and actually broke out of the resistance, right? So what did we see? We saw a higher high. We saw a higher high, right? Because the stock was able to breach the previous high, right? So if the price action is bullish, right, we would look for a higher low, right? So essentially, when the stock is pulling back, right? The stock is pulling back. What we say is that Amazon is bullish as long as the higher low is still in place, right? And what would be a higher low once we saw the higher high? Essentially, in this chart right here, Amazon would be bullish over the orange line, right? So obviously, it pulled back, and it didn't pull back all the way to the orange line, right? But essentially, that is the low, right? And this is the high, right? So we made a higher high. Maybe I can go ahead and show this right here. Is that here's the green here, here's the higher high, and let's go ahead and show right here as well. Yep, so there's the higher high, right? And let's go ahead and put the higher low in, and we can go ahead and turn this, let's turn this orange, or we'll turn it purple actually here, so you guys can see. So the higher low will be orange, or sorry, purple. And essentially, the stock would be bullish over this line here, because what we're going to do is we're going to see a higher low. And let me just try to draw it a little bit better for you guys so you can see. Yeah, right here, right? Yeah, right here. Higher highs and higher lows. Just like the screen says, green is showing higher highs, and here the purple is showing higher lows, right? So that when we see higher highs and when we see higher lows, that that reinforces a bullish thesis about price action, right? So there you go. So there's the higher high and higher low. So essentially, guys, let's put two and two together now, right? Because we kind of talked about high a day and low a day, and then higher highs and higher lows, and lower highs and lower lows. So we'll talk about high a day and higher highs and higher lows right now, just like you see on the screen, right? Is that, we go here, Amazon saw the higher high, right? And what I would be saying is that, okay, guys, let's get some red candles here and we want to buy it as close to the orange level as possible, right? Because this purple was the previous low, right? So if this is poised to make a higher low and a higher high, right, is that the stock will bounce above the orange level, right? So what do we end up seeing here is that the stock came down, and it looks like we kind of tested the VWAP area, right? For those who understand VWAP a little bit. And if you don't understand VWAP, that's no problem. But essentially, we did bounce above the previous low, right? And what did that give us the opportunity for here? And we can go and we can place this here. Is we're looking for now, we made a higher high, right? Here's the higher high. We made a higher low. So what can we reasonably expect is we can expect what now? Another higher high, right? Or an NHOD or a HOD to follow the higher low, right? So what do we see? Maybe I can zoom out a little bit so we can see it. It took some time, right? It took some time. Maybe we saw these red candles here and we decided to buy them, buy the stock, in this range here. Boom, what did we see? We saw a new high of day. And what I'll do is I'll copy and paste this. Boom. There's the higher high, right? Or the NHOD or the HOD right here, right? And essentially, it can pull back. So it's dynamic in terms of how this functions, right? Is that the levels are changing as the stock price continues to go, right? So, obviously we go here, and this is the high of day, right? So we saw higher highs right here, right? And we're seeing higher lows, right? So we broke out of the high day and we saw this new high, right? So let's talk about it, right? Maybe you guys can answer this question before I answer it here on the stream. Is that, where would that higher low have to be? Where could we reasonably expect Amazon to bounce above if it's going to remain bullish on the day, right? Try to answer it. Is going to be this purple level, right, or this orange level, which I just drew. And that is because that was the previous higher low, right? So we're seeing a higher highs, higher high, and we're seeing higher low. What we can reasonably expect now, another higher low, right? So, we're looking for the stock to essentially bounce above the orange level, right? And what did we end up seeing? It did end up bouncing above that level. Obviously, guys, hindsight is like 2020. I'm just trying to use Amazon as a good example for you guys to understand kind of how it works out in a perfect world, right? How these higher highs and how the strategy works out kind of in a perfect world, because essentially Amazon intraday, guys, was a massive opportunity for this strategy for day trading at long. It worked like clockwork pretty much the whole day. And that's kind of why I'm showing you it on Amazon today. We can probably run through an example on the short side a little bit later, but I just want you guys to understand here is that what did we end up seeing? We saw a higher low, right? And the stock ended up bouncing above that previous low, right? And what ended up happening after that? Boom. We saw a higher high, kind of where we are right now. And maybe I can go ahead and pull this up here for you guys, right? We see that. So we saw higher high, so higher, higher high, higher low, higher high, higher low, higher high, right? And what are we looking at now? We're trying to look at a higher low. And that's where the stock is right now, right? Is it's trying to get kind of like a higher low right here. Pretty interesting. And if we pull this up with the previous low a day here, or the previous low right here, what you see is that essentially, guys, Amazon likely can break out of the high a day here, right, and get a higher high, right, as long as the stock price maintains above 3553, right? And maybe we'll see, kind of what it does here before the end of the day. There's about an hour 57 minutes left here in the market day today, and one could maybe reasonably expect, as long as Amazon holds this 3553 level, which is the orange level, or the previous low, the higher lows, the previous low, it likely has a chance to make a higher high, right? And again, guys, the trend is our friend, right? We're trying to trade the trend. We're not looking to short this. We're looking to long it because we're seeing higher highs, higher lows, and HODs and HODs, right? So that's the basics right there, guys, on the concepts behind kind of, why we are looking to take things a certain way, what we're looking for on a certain stock in order to make a trade on it. And I hope it makes it clear here, guys, about the higher highs and higher lows, and the new high a day and the new low a day, or and things like that. So I can't say it enough, because this is the basis for the entire strategy, right? Is essentially, it doesn't matter what's kind of going on with the market or something like that. Is, you can look at any stock which is giving, this pattern, right? And on the flip side, maybe I can go option I here and see on the downside here, right? Purple is going to be those lower highs, right? And green is going to be those lower lows, right? So lower lows and lower highs, right, is usually the opposite of higher highs and higher lows, right? So you can play it both ways, right? But you're always looking for these patterns and these specific areas, in order, to take a trade on the asset. So, I mean, one thing that I see right now on Amazon, which I just want to point out, which makes it really interesting, is that, we have the VWAP, right? And the VWAP, like I told you guys, this blue line, right? This blue squiggly line kind of that's going in between this green range, right? And one thing I'm seeing right now is that, Amazon is seeing higher highs, right? It's also seeing higher lows, right? And right now, the previous higher low is meeting the VWAP area, kind of right here. And what I want to show, and maybe I can just show it right here. Yeah, right here. And I'm not saying that the stock is going to come down and bounce there, but what I'm saying is that, I mean, that's a really solid level, right? Is that, as long as Amazon bounces above this level, right, and above VWAP here, I mean, the stock can essentially bounce within these levels, and it looks really good. So, I'm just throwing that out there for anybody who's maybe used the strategy before, but, keep Amazon on watch right now, because the pattern is, in play. And there is actually a pretty nice support level here on the, that's that previous low, as well as VWAP right there. So as long as Amazon can bounce within this level, right, above 3553, we can reasonably expect, right, and maybe I can just show you guys kind of what we would expect to pan out based on this strategy, right, is that, we get maybe a higher low, maybe right around here, right? I'm just gonna kind of make it up for now, right? Is that we could reasonably expect Amazon to break out of the previous high of day, right? And maybe we can get it shrunk a little bit like this. Maybe we could see it up here, right? So as long as we bounce above this orange level, right, is that we have a chance likely to break out of the high of day, to make a higher high, right? So what we want to do is we want to, we saw the breakout here of the high of day. We got the pullback, right? So right now, essentially, guys, Amazon is potentially offering an opportunity, right? Because what did we say again? What did we say before we got into this big discussion here, is that after the break of the high of day, right, the pullback after the high of day is the opportunity potentially to get in for it to go higher, right? And it's always an opportunity as long as the higher highs and higher lows remain intact. So essentially, there's always risk involved with day trading, right? So, we could go ahead and, buy a call, we buy a share of Amazon right here for the day trade, right? And as long as Amazon were to hold over 3553, we can reasonably expect for it to likely hit 3600 plus today for us to sell. So those are the basics there on entry, guys. And obviously charts are going to look a lot different. We'll likely, go through some charts where it's like, you should completely stay away from it. Maybe we can go on Apple and I can just kind of show you guys kind of what to stay away with for entry. Yeah, let's talk about Apple right here. So I know we're also in an Apple trade here, and Apple is very choppy today, right? And very, very choppy. And this is actually a perfect example of when to stay away. And a big part of the strategy is that, a lot of the times when I find myself losing using the strategy is when I'm breaking the strategy and I'm not following the rules, right? And you have to stay very disciplined when using the strategy, because when you take something that's not abiding by the HOD and the LOD, likely the trade is not going to work out. And in my experiences, using the strategy and breaking the rules like that, is going to lead to a poor entry. So what do I see here on Apple? I mean, this is actually a perfect example of why, this is something that we wouldn't want to use the strategy to trade with, is that, we have the high of day and the low of day here, which have been installed kind of at open, right? Obviously this morning, maybe we can zoom up, zoom up, zoom up. Boom. So Apple, came out of the gate, right? And we saw this flicker down here. Then we saw this big jump up, right? Then it came back down. Oh, sorry about that. Yeah, and then it came back down, right? And then it came, I'll just kind of zoom out, show you guys kind of what happened throughout the day. I'm sure you guys have been tracking Apple as we do have another platinum trade on it. But, what do we see? We saw, chop, right? We saw chop. We didn't see any break here of the HOD, and we didn't see any break of the LOD, did we? No, we didn't. All we did was kind of, we maintained within the range of the in between the LOD and the HOD. There are multiple times where, we saw these green candles and, we were waiting. Maybe it was going to break out of the red level, right, and make a higher high, right? Or maybe it was going to break down under the orange level and give us a, a lower high or like a lower low, right? But at the end of the day, the stock Apple never broke out of the HOD, right? And it never broke out of the LOD. And that's all I need to know to stay the heck away from the stock, right? Because it's likely if you try to take it a direction here is that you're likely going to lose money on it unless you just essentially it would be pure luck, and that's just not what the strategy is about. It is not about pure luck. So essentially, guys, when you see a stock like this, and this is a prime example of Apple, right, is that Apple with the strategies, we would stay away from day trading this. It's not seeing higher highs and higher lows. It's not seeing lower highs and lower lows. Frankly, it hasn't broken out of the high a day since open, right? It hasn't broken out of the low a day since open as well. So essentially, guys, unless the stock breaks down under the orange level or the stock breaks up above the red level, we won't even consider day trading the stock, right? And we'll say, you know what, there's much better opportunities over there in things like Amazon, right, which are actually giving us a solid trend intraday, right? So that's one of the biggest things with the strategy, guys, is know when to play and know when to sit out, right? And using those concepts with HOD and LOD and staying disciplined and understanding where the stock is kind of relative to the parameters and the high and the low of the day, is you're going to be able to properly understand what to trade and what not to trade. So that's it, guys, on the entry portion. There's a lot of stuff that goes into it, and I'm sure I'm missing a few things. We can discuss it a little bit later as well if you guys have questions. But day trading is dynamic. Not everything is always textbook. A lot of what I was able to tell you just now was stuff that I wrote down that is a common occurrence, right? However, when we talk about management, which is the second portion here, is that a lot of the time it's dynamic. Like there's something called dynamic management. So that's what we'll go ahead and get into now. So just to clear it up with you guys, we're through the first two parts of the session. The first part was the setup, right? What software we're using, TradingView, Thinkorswim, etc. And number two was identifying stocks to enter, right? So we just went over that. And what we're doing is we're looking at a pretty nice Amazon setup right now with higher highs and higher lows. And we are seeing the pullback after the break of the high a day, which is essentially the opportunity here for us to potentially get an Amazon for a higher low, and then also a new break of the high a day. So now what we're going to do is we're going to talk about management, right? So what we'll do is, we'll pretend like we're hopping in a day trade, right? And what we're going to do today is we're going to sit out from options, right? Because options can sometimes complicate things with strike prices, expirations, and we're just going to throw options out the door today, and we're going to pretend like we're day trading equity, right? Which at the end of the day is the same thing, right? And frankly, usually it's actually a little bit easier because we're not having to deal with time, right? But what we're going to do is throw options out the window, and let's just talk about day trading equity, right? So why I say that is because what I want you guys to imagine is if we bought one share of Amazon right now, right, and we're looking at it. And we're going to use it kind of as an example, right? Because Amazon essentially, right, is giving us that pullback or that opportunity after breaking out of the high a day, right? Is pulling back here in the opportunity. So essentially, the more we can, the closer we can buy it to this orange level, the better, right? And there's no guarantee, right? And one thing I like to say is that, especially when something's really bullish, is there's no guarantee it's gonna come all the way down here. But what we do want to do is we want to try to buy it as close to that level as possible. So essentially, maybe we want to take an average and we buy one share here, and let's plan to buy another share if we can drop down to this level, and that's that, right? So what we want to talk about now is management, right? And figuring out, when you get in the trade, right, is that where are you going to exit, right? What is, how are you going to manage the trade? How are you going to understand when to exit? And one thing that I find a lot of people doing when they day trade is kind of make it up as they go, right? Where they say, oh, I went up and, I'm happy with the profits, and, that's like, 10% on the contract or 30% on the contract, and I'm happy with that, right? And I'm out, right? Is that with the strategy is that we're always predefining the stop loss and the price target upon the entry of the trade. And the big reason for that is that we trade like a robot, right? We trade like a robot with the strategy, and it's not that we feel we want to exit because we're happy with the profits, or we feel we want to exit because the losses are enough, right? Is that we are always, when we get in the trade, we are always outlining the stop loss and we're always outlining the price target, right? And when we do that, what that does is that takes a lot of pressure off of us and a lot of pressure off of our human emotions, right? And all of us humans have emotions and we want to make money in the market, right? But the biggest thing is that we want to separate that from our trading, and essentially we want to be as robotic as possible. And before I get into the management, the exit, what I want to do is just let you guys know this kind of concept. It's part of trading psychology, and I teach this a lot. Is that at the end of the day, when you have a predefined stop loss and price target in the trade, right, and you got in the trade, the stock is going to do whatever the stock was, the story was, the stock was going to do something, right? And a lot of people think that, okay, the stock is kind of going, as it is in the day, and making up the story as it goes. What I would urge you to believe in, right? And what I truly believe in is that the story of the day was already written before the day started, right? So we're just figuring it out as the day goes on, right? So, if we buy into Amazon right now, right? We buy a share, markets crash and market goes and it breaks our stop loss, right? It's not because we got in the trade and the market decided to crash because we got in the trade, right? And I think a lot of new traders beat themselves up over that, is that, okay, it tanked because I got in it, right? Or I shorted it and that's why it went up, is because it's rigged against me, right? That's not the case. Like, let's be honest with each other. It's not the case. The stock was going to do the exact same thing that it did, regardless of the position you took on it, regardless of how much you hoped and prayed it went a certain way. It was going to do that regardless, right? Before you even gotten in, that the story was written, right? You just ended up finding out about it later on, right? And that, I don't know if that makes sense for you guys, but that, it makes a lot of sense for me. It's made a lot of sense to some of my students as well. But what that means is, don't beat yourself up over it. If you get stopped out, you get stopped out. If you hit the price target, you hit the price target. It's not on you, right? It's not like a personal thing against you or for you if you profit or you lose, right? It's just how the trade panned out, right? And if you go through, your trading with that mindset of that the stock was going to do whatever it was going to do regardless of what I did, you'll have a lot less stress in your trading life. You'll be able to separate emotion a lot more. And I hope that's clear to you guys. And I'd love to talk to you guys a little bit more about that. But why I'm even talking to you guys about that right now is because it's very important when we talk about getting into a day trade, right? And we got into an Amazon share, right? Essentially, we're going to set our stop loss and we're going to set our price target, and we're going to sit here. And we're going to sit here and we're not going to stress about the candles in between, right? We're not going to stress about it going up or going down a little bit or the side to side. All we care about is if it hits the stop loss level or if it hits the price target level, right? And if it hits one of those levels, we robotically sell the order, whether it's the stop loss, whether it's the price target. We don't think twice about it. We don't think twice about it. And regardless if it was a loss, don't get beat up on it. If it's a win, don't celebrate. It goes two ways, right? It's like, we say not to get upset when you lose, but that means when you win, don't celebrate, right? Because it's the same way. You gotta keep your emotions in check both ways. So essentially, let's talk about the management, and let's talk about the stop loss and the price target. And just to reiterate, guys, we get in the share of Amazon, we need to have a predetermined stop loss and a predetermined price target. And what are those? Is, let's talk about it basically, is that it corresponds a lot with the higher high and the higher low, right? So in this case, right, is that, and maybe I can draw some arrows here for you guys to see. So Amazon, as we talked about, is bullish as long as it is above the orange level, right? So it makes a higher high, or higher low, excuse me, higher low, right? And if it does end up bouncing above the higher low level, we likely have a chance to make a higher high, right? And what I'll do is I'll go ahead and turn this green. Yeah, I'll go ahead and turn this green right here. So what you can see is, so that's what we're, reasonably expecting, right? There's no guarantee that Amazon is going to kind of go down all the way, to the level. It could, it could decide to rip through right now, right? And go through. There's no guarantee that that's going to happen. It could happen like that, right? However, what we want to understand is that if this setup is invalidated, that's when we stop out, right? That's when we stop out. So essentially, what would lead to this setup becoming invalidated, right? This setup would be invalidated if the stock is to drop through this level, right? And if this stock breaks through that level, and maybe we see this, right? Something like this, right? Where the stock dropped and it dropped through the previous, we're seeing higher lows, right? And we're seeing higher highs, right? If the higher low is invalidated, right? The pattern is done. That's the stop loss, guys. That's why we make that stop loss, and the stop loss is always under that previous low usually, right? And it really depends. I mean, that's kind of what you should do when you start with the strategy. When you make it a little bit loose, it's a little loose. Usually when we fine tune the strategy a little bit, we're able to kind of stop out a little bit. We're able to tighten it up a little bit so we don't have all this area for potential downside. But we'll get onto that later, right? I just want you guys to understand kind of the concept and kind of how it works. When you stop out is because you don't stop out, because the option contract hit a certain price, right? That's not when you stop out. You stop out based on the price of the underlying stock always, right? And you always, and you'd stop out because the setup was invalidated by the higher highs and higher lows being no more, right? So this, I'm kind of showing you here what the stop loss would be, but essentially, the stock could go like this, right? And it could go, like this, and then, it could drop back down like this, and then maybe eventually, it breaks out. Something like that can happen, right? There's no guarantees, right, about what is going to happen, like with the stock, right? Something like that could happen, right? And that's just a hypothetical, right? But I just want you guys to understand that as long as it holds that level, as long as it holds this level, is that we should remain in the trade, and there's no reason to stop out, right? Because the higher low will be in effect, and if that higher low is in effect, we can likely expect a higher high to soon follow. Let's talk about price target. So that's stop loss, right, guys, for like a long trade. And again, guys, everything that I'm saying here on, the long side, we can just click option I here, and we can invert it, right? And we can talk about, for the short side, right? So, maybe you guys want to watch the recording back and kind of see how it works when you're trying to short something. But it's very important you understand that, we're not just always looking to long things. The strategy works both ways, for shorting and for longing. And just like I'm doing everything on the Amazon long side, I can just invert the chart and show you guys that it's the same exact thing on the downside, right? So let's re-invert it back to where it is. Okay, there we go. So there we talked about the stop loss, guys, right? And let's remember, that we're in this trade here. We bought a share of Amazon, remember? And we're looking for the low, right? We're looking for the low. And it looks like we're trying to bounce here, and we're looking for the first price target, right? And what I like to say, guys, is you guys know this saying from me: take profits viciously, right? And you take profits viciously because in day trading, when you see profits, you want to take them to some certain degree, right? And one thing that you see a lot with this strategy is that you'll see me taking something I like to call a partial, right? A partial. And what a partial is it means that I'm selling, maybe I'll purchase, 10 contracts or 10 shares or 20 shares or, whatever it is, right? But I'm usually purchasing more than just one of the asset, right? And when I purchase more than one, right, it's usually maybe 2 or 3. Let's talk about, like I purchased 3 contracts, right? Is that we'll take partials, right? And partials are like partial exits, right? So we'll sell 1/3, right? We'll sell 2/3, and then we'll sell the full position, right? And why I have that is because it allows me to, kind of take profits viciously at our first price target and set, different levels for us to exit at. And it's kind of difficult for me to describe 100%, but the first price target, kind of what I want to get into now, is that the first price target is the previous high, right? And the reason that is because we can reasonably expect, if it's going to bounce, that if we see the higher high or the higher lows and higher highs, right, is that we're likely going to touch the intraday high, right? And what we like to call that is called the intraday high resistance, right? Because the intraday high, for some reason, right, is that, the buyers were able to take Amazon up, and for some reason the sellers took control, and we weren't able to breach that level, right? That previous high of day, right? So it's HOD resistance, essentially, high of day resistance. However, what that means is that when the stock retests that level, there's likely to be some resistance, right? Or in the history, right, kind of how support and resistance works conceptually, is that, we could somewhat expect that could, cause resistance in the future, right? So what I like to say is that if we do end up buying the stock, right, and we get in, is that our first price target, or PT1, is the high of day. And maybe I can write this out for you guys so you guys can see it. PT1 is previous HOD. Yep. So right here, guys. So if we were to get in the stock right now, right, and maybe I can even put on like the stop a little bit. And then stop loss is when higher low validated. Okay. And I just want to put this here on the screen for you guys so you guys can see properly, just maybe for the recording as well. But your PT1 or price target 1 is always going to be the previous high a day or the previous high a day resistance, right? So in that case, when Amazon hits that red line, that is where we take our initial profits, right? So maybe I had 2 contracts, right? So I sell 1, right? Maybe I had 3 contracts, so I sell 1, right? Maybe I had 10 contracts, right? Maybe I sell 5, right? Or it really depends on you, what your risk tolerance is. When you do hit that PT1, you're in profit, right? So it's really up to you how much profit you want to take and how much risk you want to take. We can talk about, how that works later on. But yeah, your PT1 is going to be your previous high day where you want to take your first partial. When I do really quick scalps, when we're just scalping, quickly, right? When we're in and out within a period of seconds even, right, is that we might go in and out, and we might go out of the full position at the previous high a day, right? And it's possible sometimes that the previous high a day does not break, and we stop, like the stock isn't able to get through the previous high a day, and it ends up stopping us out, right? Because it falls and it makes something called like a double top, right? So essentially, if the stock is to, go up to the previous high a day, right, and it rejects the resistance, right? It rejects the previous high day resistance, and it falls, that creates something called a double top. And that's why we take profits at that high day level, is because there's no guarantee that the stock is going to break out of that that previous high day, right? But what I do like to say with the strategy is why is it a PT1, right? Why is there PT2 and PT3, right? Is PT2 and PT3 involve a break of the previous high day resistance, right? So up here, right, for a higher high, right, a higher high. So just like we were saying, right, higher lows and higher highs, right, is number 1. Our PT1 is always going to be that previous intraday resistance, because we want to take our profits viciously, right? We want to take those profits viciously. And then for our PT2 or our PT3, can involve a break of that for the higher high. And that's usually when you see a lot of profits, is when you break out of that previous high day and you make a NHOD or a new high day. right? And for the stop loss, is when the higher low would be invalidated, right? Which essentially would be, if just like we were talking about, right? Is if this goes, down, and I'll try to, bring this up like this as well. And there you go, right there, right? So the stop loss would occur if the higher low is invalidated, right? And the price target will occur, number one, PT1 will occur at the previous intraday high resistance, and PT2 and PT3 would occur with the higher high after the higher low, right? So I hope that makes sense, guys. That is a part of management. Another thing I quickly wanted to point out is when this is something that I don't know if this is like taught in textbooks, but it's something that I have realized happens all the time in markets, especially when a trend is very strong. When a trend is very strong, you see this occur. And one thing I want to do here is kind of show you what this is that, yeah, Amazon is doing it textbook right now, beautifully. It's doing it beautifully right now. And what I want to do is I want you to look at the orange level. And what that orange level is displaying is this concept, which I'm going to try to have you understand, is that when something is really bullish, right, the previous resistance can become support. So let me go ahead and write this down. So if something is bullish, the previous resistance can become support. Okay. And so I'm not sure if you guys have noticed this before, but I have certainly noticed this. And kind of what I want to show you here, maybe I can clean it up a little bit. But look at the words on the screen, kind of look at what is occurring here on Amazon, right? Is that, let's scroll back here, right? So the previous resistance, right? So what was this? This was the previous intraday high resistance, right? So let me turn that red as resistance, right? This red level was the previous intraday high resistance, right? We broke out of that level, right? We continued higher, right? We made the higher high. We made the higher high. And what do we see is that we saw, and look at this, right, guys? Look at the words and look at what's occurring right now, right? Is that the previous resistance is acting as support, right? And there's no guarantee that this is going to continue to happen. Obviously, we've gone through the Amazon setup and stuff like that. But look at that, guys. Look at how that is working right now on this bullish asset. And this isn't just with Amazon just right now, and I'm just trying to make that up, is that this is something that occurs very frequently when day trading, when something is in a strong trend, right? Is like in a bullish trend, the previous resistance can become support. So essentially, if you want to have like a tight stop or something like that on this day trade, right, is that this previous support here, this previous resistance has been acting as support for the stock, right? I wouldn't be surprised to see Amazon bounce over this and make a new high a day, right, and hit our price target, right? That would symbolize a like very bullish price action, right? Because the previous resistance can become support. Not sure honestly how, like, why that occurs, or but essentially, why I would say it would occur is because traders are all looking at the same thing, and traders might see that previous resistance as support, and and people decide to buy it up above that level, and sometimes it works, sometimes it doesn't, but usually on the biggest winners, the most most solid day trades, that I get into with the most solid trends, usually that is one of the most glaring things that occurs. So I want to make that clear to you guys. And maybe I could even show you guys on the downside here. Let me go ahead and invert this. Yeah, and let's change it up here for the inverse for the downside, right? So when it's bearish, previous support can become resistance, right? Previous support can become resistance, right? This is what we see when something's pretty bearish, right? When something's pretty bearish intraday, is this, I really like trading this, adding this to the strategy when we're shorting something. I really like doing it when we're shorting something. And essentially, the previous support could become resistance, right? So this was the previous support. Maybe we can kind of zoom up so you guys can see it just like it was, right? So that was the support, right? We broke down, made a new low a day, right? We made new low a day, right? And now we're bouncing up a little bit, but we're maintaining under that previous support, right? So that previous support could, become that previous resistance, and essentially it could, continue lower, something like that, right? And that would be, I would not be surprised to see something like that occur. So just so you know, guys, it goes both ways, and I just want to make sure you guys are aware of that. The last thing I really want to get into regarding management here and exiting is the stochastics indicator at the bottom of the screen, right? And I'm sure you guys were wondering kind of like how that's used. And truthfully, this is something that has really helped me with timing. And timing is very important with day trading, as you guys know. But stochastics has helped me understand timing a little bit better. And let me try to break stochastics down as to how it should be understood. So stochastics looks a lot like RSI, right, or kind of like MACD, and more so RSI, right? I know you guys sometimes use the relative strength index or RSI, and stochastics is what I like to say is RSI kind of on steroids. But it's more of like a momentum RSI, and you can only use stochastics effectively when there's a trend you can identify, right? So in this case, right, this is an uptrend, right? And in this case, this is a downtrend, right? And maybe we can go ahead and zoom out here to like the 3-minute, so you guys can kind of see how this is working here. Yeah, here's the 3-minute. And we'll go here. Yeah. So essentially, guys, yeah, let me just do it like this. This is going to make a lot more sense for us. So stochastics is always to be used when something is in a trend, right? So we're identifying this and we're saying it's a downtrend, right? We understand this is a downtrend, right? And in this downtrend here is that whenever what we're looking for on stochastics is a break above 80, right? Or a breakdown below 20, right? So we are not concerned of the stochastics when it is in the shaded range, right? In between 20 to 80, right? We care about stochastics when it is on one of the, the outlier of the range essentially, right? So above 80 or below 20, right? And what I want you guys to understand here is that when something is bearish, above 80 is a short signal, right? So this is like a short signal, right? And this is a short signal, right? And this could be another short signal, right? And we can continue to do that, right? And that might sound very, very simple, right? And obviously there's many, this is just one indicator you can use, and you need to layer it on top of the strategy, obviously, to make it successful. But when the stochastics are above 80, that is going to be a short signal, right? Similarly, when you see a trend like this and you see, this that is below, I'm just using this as an example right now, guys, but when you see it break below, and obviously Amazon has been pretty bullish today and not really want to break below there, but in an uptrend, when it breaks below the 20, that is a buy the dip opportunity, right? So essentially what stochastics are is that they help you time a trend. They help you time a trend because you will identify something in a trend, and when something breaks below 20, that's a buying opportunity within the trend, right? And what you can see is that if you buy below 20 here, every single time that you buy below 20, the price of the stock ended up making a new high, right? We broke below 20 here, right? And we got in, right? And it made a new high, right? And we got in below 20, right? And we potentially will make a new high. So we'll see how that goes, right? But those are the basics behind stochastics, and what you can use those for is entry, right? Those really help you out with entry and management as well. Is that essentially we would be looking? Maybe we could look at like something like the Amazon 5-minute. Maybe even let's go over to the GS. Yeah, let's go over the GS 5-minute here, right? Is that This is looking like a pretty solid downtrend, right? We're also below VWAP, right? We're below VWAP, so we understand that it's relatively weak compared to, how it was, the average price throughout the day. And we can see that, above 80 here, if this is going to continue to be a downtrend, right? And obviously, the stochastics can perk up, and if the trend reverses, stochastics is useless, right? It's useless, right? But if the trend continues, right, and we're confident in the trend continuing, that's where we can use stochastics, right? So if we think Goldman is gonna, make a new low a day or something like that, or we think it's gonna continue to be bearish, essentially with the 5-minute wicking above 80 here, we could say, confidently this could be a short signal here, for us to take it potentially to the new low of day, right? The new low a day right here, right? So we'll look for the new low a day, potential short signal. Maybe we want to stop out around VWAP, right? So yeah, that's the basics on stochastics, guys. I'm sure I'll get some questions on it, but that is just another ingredient that you can use in this day trading strategy soup to make it delicious. So that's kind of what I would say about stochastics. And then finally, I would want to discuss VWAP, and why we use VWAP is VWAP helps us also kind of identify a trend. VWAP, what it calculates is, I think it's the volume weighted average price. And what that means is that, based on the volume and the weighting of the volume, it's essentially the average price of the asset throughout the day, right? And so Amazon, and sometimes I like to do this on Trading View, is that you can go, I can't remember which one it is. Yeah, right here. If you click this button here, it actually tells you, it lists you what VWAP is on intraday, right? Because sometimes it can be tough. You'll kind of like try to eyeball it, right? What, 3,553 or something like that. And you can just read it off the side of the screen here, right? But what VWAP is the volume weighted average price, right? So what that tells you essentially is that when a stock is above VWAP, right, is that the current strength of the asset or the security, or the price of the thing, right, is relatively strong compared to the average throughout the day, right? Let's go to GS, right? GS, obviously we're coming up here to potentially test VWAP, right? But, the average, the GS is essentially, weaker than, the average price throughout the day, right? So it's relatively weak, right? And maybe we can go over to Apple here to kind of see something in the middle, right? Is that Apple, again, like Apple's not in a solid trend, right? And Apple is kind of playing with VWAP the whole day, right? So it's kind of been up and down around VWAP all day. Right now it's, it went from weaker to stronger, but we're not seeing any kind of solid trend, right? But what you can also see, and I'm not sure if I can find a good stock off the top of my head right now where a VWAP bounce worked well, but what you can see is, like, for example, on a strong on a strong stock, and we'll talk about Amazon here, right? Is that this previous this higher low, right? We're looking at this higher low, we're looking at this higher high, right? We're looking at the higher high, right? And we're looking at the higher low, right? So essentially, we've talked about this multiple times now, but I just want to show it now with VWAP, right? Is that right here is that the stock can come down and potentially maybe make a higher low right around here, right? Right? And what is sitting right there at the previous resistance, or at the previous support, excuse me, is the VWAP, right? So if the stock does end up kind of coming down here, it could be an extra, something like maybe an extra supported bounce, essentially, because you do have VWAP. And I think, some people have day trading strategies, I do not know them actually, where people like might, take things long off VWAP, right? Or take things short off VWAP, depending on their strategy. However, I use it more to kind of digest, where the price is, for the strategy, rather than, taking things specifically long off the VWAP or specifically short off the VWAP. But, it's beautiful sometimes, because, the support will meet the VWAP, right? And sometimes you'll get a beautiful bounce off of that, double level, or that double like support level with the VWAP and the support. So, that's something that I just want to point out there, about VWAP and stuff like that. And that's essentially it. So the only other thing I have here on my list that I wasn't able to go over today was time frames, and I can go over that really quickly. But the main time frames that I'm using for the day trading strategy, guys, is 15-minute I'll use kind of to understand a trend. Obviously, 15 minutes is going to look a little messy with all the drawing we did. But the main things, the main time frames I'm using are going to be the 3-minute lower, 3-minute and down, 3-minute and down. 3-minute, 1 minute can help as well. I'm actually not I don't use the 1 minute too much, to be honest. I use the 3-minute, and then I use the 30-second here. 30-second is big. And then I also use the 15-second. Right? So the 15-second as well. But what I would say is don't get too caught up in the 15-second ticks, right? There's going to be a lot of movement there on the 15-second stuff like that. Don't panic or anything because you see a big red candle in the 15-second. Zoom out to the 3-minute or the 30-second. You'll see it's not that big actually. So that's the basics. Is we're using kind of these shorter time frames. The other thing is that when the market opens, right, is that when the market opens, and maybe I can kind of zoom up here on Amazon, just like the market would have opened, right? Let's kind of zoom all the way up here, right? So today, boom, ding, 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 ding. So the market opens, right? And we see these candles, right? And it goes and it goes and it goes. And it wicks down, and then we get a new high day, right? So although we saw this price action, right, I always sit out for at least 5 minutes when the market opens. And the reason because of that is because we have to allow for intraday levels to form. We need to see intraday levels form, right? And the reason because of that, that's just something that I've done ever since I've started day trading. Essentially, is that I think I've been burned, especially when I was trying to learn day trading and stuff like that. Is that I got burned. I got in as soon as the market opened because I felt it was gonna go up, right? And it went down, right? And I got crushed, right? Or I got in because I thought it was gonna go down and it decided to go up, right? We don't guess with the strategy. We don't use guesswork. We follow the rules, right? We stay disciplined. And just to reiterate the discipline is that wait 5 to 10 minutes after the market opens, draw out the levels, digest the price action, stay disciplined, and then take a trade. Don't jump the gun, because especially like the first 5 to 10 minutes in the market, there's a lot of volume, right? There's a lot of volume. You'll see things quickly flicker from like high a day to low a day. I mean, I can even show you on Apple, right? This is probably a really good example of how it kind of did earlier today, right? Is that, market opened, right? Ding, 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 market opened, and we went up, and then we flushed the low a day, right? We flushed to the low a day, right? So we'd be like, if we didn't obey the rules of the 5 to 10 minute buffer, right, we'd say, oh, we're looking to short it, right? Or something like that, right? And, needless to say, immediately after that, what do we get? Boom, LOD all the way up to HOD, right? So now we're like, oh, shoot, we hopped in short, but then we got burned, right? But now we're looking at long, right? Now we're looking at long, but now we've chopped, right? And we've come back down to the LOD, right? So obviously Apple's like a complete chop fest, but that's why we allow 5, 10, 15, even sometimes 15, usually not. But that's why we allow, this time before we, jump the gun or make any trades. So yeah, that's about all I have for you guys today. I do understand that I have gone a little long here, and I haven't been able to look at the stream chat. I'm sure you guys have a ton of questions. What I'll go ahead and do is after this session, number one, I have to make sure it's recorded, and to post out that recording to everybody so you guys can review it and people who weren't able to attend can see it. I really appreciate you guys coming to this session. I hope you guys learned something. I really did try to open up about everything, and it might not make total sense, but maybe come to my day trading sessions where we do it live, and then we can kind of do it real time, and we can realize profits, realize losses. You guys can kind of see how it shakes out. If you guys do end up using this strategy by yourself, start start light, start light. There's no reason to risk more money than you have to before you master the strategy. That's just the basics behind it. Um, and there's some things I'm sure I've left out, with fine tuning, especially with like management and levels, because things are, change a lot, when the market is moving and stuff like that. What I'll go ahead and do, guys, is read the stream chat. Any questions you have, I will answer them via text, in the Discord. And then if I'm sure you guys have some really good questions, which I want to run over in another session. Maybe we could do it later this week, where I hop on for another hour. Maybe go through some things I might have missed today. Answer some important questions. Maybe do some kind of advanced concepts regarding the day trading strategy. I'd love to hear what you guys think, because I know I was telling you, today we will. I'll teach you kind of how to fish, right? And when you can fish, you can feed yourself forever, right? If you know how to fish. So I told you it was going to be really simple, right? I don't know. Maybe it was a little bit more complex than some of you guys were expecting. Maybe it was a little bit more simple than what you guys were expecting. I'd love to know kind of what you think about this day trading strategy. I know Cobbs has his own kind of day trading strategy as well. And many people, to each his own. But this is what I have had, a lot of success with in the markets. And staying disciplined. I've, over a long period of time now, I've, experienced some positive results regardless of what the market was doing. Because honestly, there's always a stock out there, which was at HOD, and always a stock out there at LOD. And obviously keep an eye on the SPY, guys. It's important to know kind of what the SPY is doing. I can get into that a little bit more. Yeah, just the last thing I want to throw in there is that you always need to have the SPY up on another monitor or a chart, because at the end of the day, all stocks are going to have a beta, right? Which means that they correlate to the market to a certain degree. Most of the stocks that you're going to trade are going to have a positive beta, so that means that they do correlate directly with the market. A negative beta would mean that they would correlate inversely with the market, right? And usually there's not many stocks out there on the market that have negative beta. So usually you're going to have a positive beta stock that you're going to be working with. And that's why you always need to keep an eye on the SPY, because all the levels can be intact, right? Everything looks good. Everything looks good. You're in a day trade, right? Powell comes out and says something, right? Market tanks 2%, right? The strategy doesn't matter at that point, right? That is something outside of your control, because that is like that's news. That's a fundamental thing, right? We're talking purely about technicals, right? The strategy is essentially purely technical, right? And fundamentals will always top all, right? If the stock moves because of news, fundamentals move the stock, it's going to completely invalidate the strategy, and that's just the way it goes. Just the way it goes. So other than that, guys, I really appreciate your time today. I hope you guys gained something. Thank you so much. We will talk soon. Thanks, guys. Cheers.